Hello again, fellow BeachBum traders. Welcome back to part 2 of our weekly trading game plan for the week of February 7th through February 11th. If you have not already seen part 1 of our weekly trading game plan for this week, I would highly recommend that you also view part 1, Earnings Matter Again. We'll leave the link to this in the description box below as well, but again, this provides the input data, the market analysis, etc. that goes into our watch list updates and strategies in part 2. So again, we'd highly recommend that you view part 1, Earnings Matter Again, and then let's get started with part 2 and look at what kind of updates we're going to make to our watch list, what kind of strategies we're going to employ for this week of February 7th through the 11th of 2022. Okay, I'm in my Stocks tab of my online browser version of Webull. Again, as always, you can get 2 or more free stocks with your copy of Webull via our affiliate link included in the description box below. And first off, we'll talk about oil and natural gas like we saw in the futures for part 1. There's been a lot of volatility in the oil and natural gas areas, and again, I think this is a great opportunity for this upcoming week, the continued volatility in oil and natural gas. So first you can see we went long on DRIP, which is the short on oil. Oil then pushed up. We went long on the first. You can see it then popped up over 93, I believe, and then started to recede. If I look at DRIP very quickly, we can see it actually even came down lower. They're still talking about oil 100, 120, etc. So if you can find the top even better than we did, which would be the bottom in DRIP, oil's not going to stay up forever. So eventually it's going to retrace, it's going to come back down. So if you can have patience, get in long on DRIP at a low price and then wait, there's a good profit opportunity in there because you can see it has nice range even over the past month. So that's DRIP. You can see we put that in the comments of last week's part 2. We're now long DRIP. Gush is the inverse of DRIP. If you want to play the momentum with the upswing in oil and wait for it to peak, you can go long on Gush. Again, that would be the momentum for oil going up. You do want to get out before it starts to retrace back down. So again, to play the volatility in oil would be Gush for the long in oil, DRIP for the short in oil. Boyle is the long on natural gas. You can see, again, natural gas has been very volatile. We made a nice profit on the run up, the last run up on natural gas. You can see it kind of peaked. When it peaked, we went short on natural gas, so we are now shorting natural gas using KOLD. KOLD is the short on natural gas. So you can see, again, we went on the second, we went long on KOLD. Again, we didn't necessarily get the best price. Natural gas went up again, which caused KOLD to go down farther, but now it has recaptured our price and is now profitable. So again, and that's a general thing in our swing trading strategy is, we're looking for a swing, we're looking for a thesis backed by the market analysis, etc. we do in part 1. We may not get the very bottom price to get in, we may not get the very top price to get out, but the point is if you can catch the majority of those moves, those swings, you can make a lot of money. And it's just being patient and having a thesis behind your swing trades. So again, we are long KOLD, as we put in the comments. Natural gas is continuing to retrace. As soon as that bottoms and then turns back up, then we will take our profits in KOLD, and we may look to swing it back with Boyle. So again, Those are the big plays, I think, this week is the volatility in oil and natural gas, and we're going to continue to swing those, to watch oil and natural gas for short-term swings, scalp trades, and make a lot of money in those areas. And hopefully that will give you a lot of opportunity as well. Okay, if I then start going through some of the stocks, some of the tickers that we've had on our watch list for a little while. We've had Corsair Gaming, KRSR, on our watch list for a little while. We're going to keep Corsair on our watch list again for this week. We're kind of looking for it to bottom, hold a support. It's looking okay. It's, holding up, but it hasn't picked a direction. It's continuing to make lows, etc. We still like it as a thesis, and we're going to look for an opportunity. If it does one of these dips again, maybe we can catch it and ride it up if it looks like it has some real momentum to move. Right now it looks like it's in a range. If you're doing a day trade, etc., you may be able to make some money on these short-term swings up and down, but we're looking for it to really make a run. And it also is pressured by the overall tech market. So we'll leave Corsair on for now and see if we get an opportunity there. Again, market conditions also dictate, is it a good buy at this time to hold that individual stock. We talked about DRIP, Gush, KOLD. Let's talk about KTOS, Kratos. This is an aerospace and defense company. So again, the thesis behind Russia-Ukraine is very positive. However, you can see KTOS has been pretty flat lately. But I think, again, this is a good opportunity. We're leaving it on our watch list. If we get this opportunity down in this 16-ish area where it previously hit support, went down a little bit, and starts to swing up, you can see it hasn't really attracted much interest yet. So this might be an under-the-radar defense play, especially if we get that catalyst, that trigger event that Russia invades, we may see the defense stocks take off. We'll have to see. So we're going to leave O. O is Realty Income. It's a REIT, a monthly paying REIT. We really like O. Again, it pays a nice monthly dividend. It's a diversified REIT. We've traded this a number of times, held it for a while. We'd like to get it a little lower, 65, 65 or so. So if we get a little downward pressure down here to this support level, we're going to throw a chunk into O and let it sit and collect monthly dividends. Similarly as OPP, I think this is a fixed income fund, ETF. Again, we'd like to see it come down. It pays, a nice dividend. So if it comes down a little bit, again, these are opportunities we've talked about in part one. We expect volatility in the market. We're in a declining market. I'll call it a bear market. And again, when we get to strategy, I'll talk about that more, how to strategize for the bear market, the declining market. But these are opportunities to get into, something that's going to pay you a dividend on an ongoing basis while you wait for the market to stabilize. And we've got the Fed thing coming up in March, and we expect volatility around that. We might have a severe decline around that, kind of like a taper tantrum, but more like a Fed rate hike tantrum in the March time frame. So we want to position ourselves to secure our money, continue making money through that level of volatility. So again, just some more of the thesis behind why we're watching things like O, Realty Income, OPP, Fixed Income Fund, and we also talked about STAG. STAG's another REIT, an industrial REIT. So again, warehouses, logistics centers, etc. We like the concept. It's one that others have recommended to us, Joseph Hogue, etc. Of the Let's Talk Money channel, which we really appreciate. If it comes down in this 40-ish range, we want to throw a chunk into STAG and again let it sit and collect monthly dividends. So we want to continue to watch those. Any opportunity, we will jump into those. POW, POWW, we added to our watch list a little while ago. It's an ammunition stock. So again, the defense, Russia-Ukraine thing, as well as civil unrest. I won't go into those details right now, but those are opportunities for Powell. We'd like it to come down to the support level just a little bit, around 4, and then we would look to enter Powell. Roku, we've had on our watch list for a long time. We did our due diligence video on Roku. It's been in decline, so we're just really waiting for it to stabilize. It does look like it's starting to stabilize, as you can see, and if it comes back down to that support level and doesn't continue to decline further, then yeah, we're going to go long Roku. SLVO is one of our premier stocks, title stocks for this week that we're adding, because silver did a sharp decline. You can see just this popped up on one of our screeners because silver was dropping on the futures, and we already own a chunk of SLVO. SLVO is the Credit Suisse ETN on silver. Pays a nice monthly dividend. We hold a chunk of this in one of our retirement accounts, and it's just been paying us out monthly, every month, a nice dividend. And with the decline in silver, we thought, hey, maybe we'll double down on silver. So that's our plan. Is if silver takes this dip to this 480 area again, SLVO dips down to 480 again, we're going to throw another chunk and double down on silver. And I think this is your opportunity to get into this ETN with silver. Again, it pays a nice monthly dividend month after month. Or they send you a dividend, and it's cash if you want it, or you can reinvest if you want, or if your retirement account forces you to do so. Just as a side note, it appears, as far as I can determine, that Webull does not support reinvestment, which actually I don't want. I want the cash. I want to do the reinvestment myself. So these dividends, I want the cash from the dividends, so I can choose where to reinvest that cash. I also have a chunk of this in a Fidelity retirement account, and they force me to reinvest. Well, then I don't have control over that, how I use that dividend cash. They just automatically reinvest it. It's fine for dollar cost averaging, but what if it's buying in at the top, and I don't want to buy more of that at the top? I would personally rather have the choice. So again, another nice feature of Webull is, I believe, you automatically will get the cash from dividends. You can choose how to reinvest them and reinvest them wisely. So I hope that all helps. So it looks like right now Webull is offering 3 free stocks when you open and fund a new account. And it looks like they're offering your first free stock up to $300 value just for signing up. And when you deposit any amount, you get 2 more free stocks valued up to $3,000. So I'm not sure exactly how long this particular special offer is going to run. They do run special offers from time to time, so maybe now, if you're not already using Webull, maybe now is the time to get your 3 stocks with Webull. You can find our affiliate link in the description box of this video included below, and or in the trading tools links on our homepage. So again, take advantage of this opportunity to get 3 free stocks, the first one valued up to $300 and 2 more, each valued up to $3,000. And I hope that helps. Okay, we talked about STAG. SVXY is the short on the VIX, and as we've talked about for a while, we have a outstanding good to cancel buyout, looking for a peak, a spike in the VIX that would catch any spike in the volatility. Right now the VIX is sitting at 23.22. It's been hovering in the 20s. Looks pretty indecisive as to which direction it's going to go. And again, SVXY is the short on the VIX, so it goes up when the VIX goes down. UVXY is the leveraged ETF that is along the VIX, so it goes up as the VIX goes up in a leveraged manner. So these are two leveraged ETFs that you can trade, play, swing, day trade the volatility in the VIX. And as we've talked about in the videos from a couple weeks back on Mr. Market's Wild Ride, I think there's a great opportunity if you're a day trader, short-term swing trader. There's great opportunities to make money just scalping, swinging, momentum trading the VIX using SVXY and UVXY. So again, these are ones you want to keep an eye on. Watch the VIX. Again, if you're a short-term day trader, scalper, momentum trader, etc., we can make money in any market. That's the point I've been trying to make for a long time. Is I know the market's bearish. It's in a downtrend. There are opportunities. It's volatile, but there are opportunities to make money from that volatility, from that declining market. Again, you can make money. If I can convey any message, it's you can make money in any market. It's just get your mindset set the right way. We'll talk about that in the strategy. Focus on the things where you can make money and what are the tools that you can use to make money. So SVXY and UVXY are tools that you can make money from volatility. So we hope that helps. VTI is the total market fund. It's very popular again. This is one where, again, we just want to park some cash for the long-term turnaround in the market. Again, we're talking about the market's declining, so we don't really expect this to go up a whole lot in the near term, but this is a very long-term investment on an overall, years, decades going forward. VTI is a very popular one. Very low risk because even better than BOO, it's not just the SPY, just the S&P. It's like 4,000 stocks across the market. So if you're looking for just getting started in investing, you're looking for long-term investing, dollar cost averaging, etc., VTI is a great way to get started. Again, we're not financial advisors. It's not financial advice. It's education. But again, if you're just starting out investing, I would recommend starting with VTI and maybe BOO if you want to focus more on the SPY. And we'll talk about that more in the future. So those are our main watch list updates for this week. Now let's talk about our bullpen, shopping list, strategies, etc. Okay, let's talk about updates to our bullpen watch list, our bullpen stocks. And if you're new to our BeachBum trading community, to our BeachBum trading channel, and we hope you will choose to subscribe. Hit the subscribe button if you're not already a member of our BeachBum trading community. But the concept of bullpen stocks is something I borrowed from Jim Cramer. These are stocks that we're not going to watch on a real-time basis, but we'll revisit on probably an end-of-day basis to see if the setup is more attractive. The setup isn't quite something we want to add to our main watch list right now. We want to keep that focused to the minimum number of stocks that are going to present an opportunity on a daily basis. But these are ones that might set up in the very near future, so we'll revisit at end of day, see if the setup improves, and maybe we'll put them in the game. That's the concept of the bullpen. So let's take a look at what we've got in our bullpen right now. We've had grow. You can see it's kind of run up. It's running up right now with cryptocurrency. They invest in cryptocurrency as well as other things like gold, etc. Again, this is one that pays a nice dividend. So we've traded it in the past. This one may have already run away, but if we get a retracement in cryptocurrency down below this around this 450 level, that might be attractive, or a little below 5 might be attractive. So again, that's one we've had in our bullpen. LMFA is one that popped up again as a potential value, and this is one we've had on our watch list in the past. We have a due diligence video that you can see on LMFA, and just a reminder, all of these that we've talked about, we're going to talk about, that we've had previous due diligence videos. I'll put the links to those in the description box below, so you can do a deeper dive, get more due diligence information in those videos for the stocks that we have previous due diligence videos on. So LMFA is one. So I'm not going to talk about it a whole lot here. You can go see that due diligence video for yourself. But that popped up in a screen as being potentially attractive, and you can see, we may have missed the bottom there, but if it does retrace a little bit around this bottom, LMFA is one that may be attractive in the near future. Same way with pets. You'll see we got stopped out of our previous position in pets on February 1st. We got a small profit, 2% profit, which is fine. 32% a month is I won't complain about. Congratulations if our fellow BeachBum traders got in and made some money on pets. This is one also we've written covered calls against in the past. So if it comes down a little bit again, we're going to go back into pets. We like pets, so you can see our due diligence video on pets. We're going to put PayPal on. You probably heard in the news they reported disappointing earnings, and again, this is why part one is called Earnings Matter. Is they disappointed on earnings, their subscriber growth was low, and it took a dive, and now it's becoming attractive. I probably should do a due diligence video on PayPal. We've had decades of experience with PayPal, and I can talk about that and the opportunity I see going forward in PayPal. We just want it to stabilize. Again, the sentiment from the earnings is very negative. Jim Cramer said they're going to be in the penalty box for a couple quarters. That's probably true. So this is a turnaround play, kind of like we played IBM in the past. Irrational reaction to negative earnings. As soon as it bottoms, we'll go long PayPal. So we're just waiting to find the bottom in PayPal. Skills is an interesting one. We've had it on our main watch list, and it continued to decline. So we demoted it to our bullpen. We do have a due diligence video out on skills that we would recommend that you see. ARK has been selling off, and in just a second I'm going to jump over and show you in lucid tracking the sell-off in skills, and let's see if it looks like ARK is almost done with their selling. Okay, if you're wondering, how do I know that ARK is selling skills? We've done a previous video on how you can get the emails. So I get an email every day that shows all the buys and sells that ARK is doing on that daily basis, and you can get those emails as well. You can see our previous video, how to get and use ARK Invest daily trade information, and it also shows you how you can look up positions, buys and sells for a given stock in any of the ARK ETFs in a site called lucidtracking.com. So I've brought up the snapshot of skills, the recent history of skills in lucid tracking, and we can see these sells, over the recent history in skills in both ARK K and in ARK W. They've been selling off. So I don't know necessarily the thesis, the rationale why Kathy's selling off skills. It may be just the decline in their ARK ETFs and they're raising money, or there may be some fundamental reason that I'm not wholly aware of, because you can see our due diligence video on skills and why we kind of like it. But we could see their original position in ARK K was 14 million shares, and now they're down to 207,000 shares in ARK K, and in ARK W they had 5 million shares, and now they're down to 97. So I wanted to bring this to your attention because it looks like they have almost sold out. Now, whether they're going to hold a 0.1% position in skills just as a lotto ticket for themselves, or if they're going to wholly sell out, I'm not sure. But we can see they're essentially done selling, or very close to done selling. So I hope that helps you see for any stock that ARK, any of the ARK ETFs is buying or selling, you can go to lucid tracking and see what their what the buys and sells are, as well as how many shares they're currently holding. Is it increasing? Is it a net increase, a net decrease, or are they just kind of trading around a core position to hold a particular weighting? So hopefully that helps. I think that's useful additional information to know about stocks being held by ARK. And again, you can get this information and see how to do all this for yourself in this previous video on how to get and use ARK Invest Daily Trade Information. Okay, so given what we saw in Lucid Tracking, that ARK, it looks like ARK is pretty much done with their selling. That may reduce the downward pressure on skills, so if we do see it stabilize at a bottom and start to swing back up, then we'll move skills up from our bullpen again into our major watch list, but we want to see that stable bottom and turn up. TAIT is again one we've had on our main watch list in the past. We've traded in the past, and we do have a due diligence video out on Tatron components, so we'd recommend that you see that due diligence. Again, I'll put all these previous videos in the description box below with links, but you can see it made a bottom. It popped up on our screeners again as being a value with a low support level, and so it looks attractive. If it is stable and bottoms, does a double bottom, multiple bottom, we would find TATE attractive and we would move it up to our watch list. Again, you can see the due diligence video. You can also see that they're coming up with their quarterly, they announced a quarterly dividend. And so it is payable on the 28th for any stockholders at close of business 11th, which means the ex-dividend date is February 12th. So if you buy into TATE before February 11th, you will get this 4.5% dividend. So again, this is a dividend paying. It's a kind of an aerospace, maybe defense-oriented stock. That again, you can see our due diligence on that again. And again, if it makes a double bottom, multiple bottom, we may go long on or move TATE up to our watch list and or go long on TATE. TMF and TYD are the ETFs on treasuries. TMF is on the 20-year treasury. Again, as we talked about in part 1, with the Fed decreasing their purchasing, we saw, volatility in the treasuries, but overall the prices have been decreasing, the yields have been going up. We're waiting for a bottom in these treasuries to take an opportunity once the Fed completely finishes. But now again, they're talking about selling. So the question is, what are they going to sell? And I don't think we're going to know more about that until March. So it's in our bullpen. We're watching it. Once these things finally bottom, or TMF finally bottoms, the 20-year finally bottoms, we may go long TMF. However, we're going to take TYD off of our bullpen. I revisited this. I looked at the range. It just really doesn't seem that it's going to offer a reward to risk ratio that's attractive anywhere in the near term. So we're going to take TYD off the bullpen. You can see it's really quick and easy to maintain your watch list, any number of watch lists from the stock screen in Webull. You just right click, select, delete. Okay. So finally we've got Yalla. And you'll sometimes hear Yalla referred to as the Amazon of Africa. We've talked about Yalla. We've had it in the bullpen for a while. And one of the reasons we're keeping it here, even though it kind of ran up and then went flat, is because of that nomenclature that people refer to it as the Amazon of Africa. You saw Amazon just ran up something like 13% on their positive earnings, because again, earnings matter. So here's a potential sympathy play based on Amazon's earnings, is the fact that people refer to Yalla as the Amazon of Africa may be a catalyst for Yalla. Now they're just an online marketplace like the original Amazon. They don't have AWS, they don't have web services, etc. But if you think about it, maybe I need to do a deeper due diligence video on Yalla, but if you think about it, if they're perceived as the Amazon of Africa, maybe that's a direction that they're going to grow into and do web services and cloud and all that kind of thing. It would seem to make sense to me. So again, we're watching for that trigger, for that sentiment move in Yalla. If it does take off, that may be an opportunity for you. So now let's talk about shopping list strategies going forward. How else may we be able to make money this week? Okay, let's talk about shopping list stocks, other strategies, etc. You can see I don't really have a lot to talk about in terms of shopping list. Now, what is a shopping list? If you're new to our BeachBum trading community, it's essentially, keep your list of stocks you always wanted to buy when the market takes an irrational dip. If they take an irrational dip on earnings, what are the stocks you always wanted to buy? You keep that list of stocks, and when you get the opportunity, then you buy. Again, if we get a major irrational decline in the market, or again on earnings, what are the ones you always wanted to buy? That's just a general recommendation. Right now, individual stocks are a little bit risky, just because the market's so volatile. So again, we're not focusing on shopping lists right now, but again, that's the general concept of shopping list stocks. Okay, let's briefly talk about some other updates to some other watch lists that we maintain. You've probably seen in the past, I also keep a watch list in Webull. And again, a really nice feature of Webull is you can have any number of different watch lists that you watch around a theme, category, etc. It's really quick and easy to create and maintain watch lists in Webull. We'll probably include those links for our previous videos on how you do this in the description box below, so you can see those again, how you can build your own sets of watch lists. And one of the nice things about these watch lists in Webull is you can see the activity. Obviously the market's closed today, this is Sunday, but when the market's open, you can flip over to these watch lists and you can see movement, you can sort by the percent change, etc., see what's moving, what's not. So I keep this list of a whole bunch of ETFs, so I can do that and see what the trends are during the day. And a couple were brought to my attention. I want to thank his acronym is Easy Mike, is someone I've met in various chats, the Benzinga shows during the day. And again, if Easy Mike is here, I want to thank him for bringing these two to our attention. Is he pointed out some additional ETFs on natural gas and oil that correlate more directly with the commodity prices than do the other leveraged ETFs like boil and cold and gush and drip that we watch and actually trade. But if you want to get something that's more directly correlated to the actual commodity future, you can use UNG for natural gas and USO for oil. So again, in combination with boil and cold and gush and drip, this is another way to see the activity in those areas, and you can see the correlation between these and the actual commodity price, like in investing.com. If you're watching the commodity price, either market or futures, you can see the correlation, and that can help you make trading decisions in those leveraged ETFs as well. Although again, cold and boil and gush and drip are not directly correlated, so sometimes you'll see a spike in the commodity price and the leveraged ETF doesn't move, and you're wondering why. Well, those are based on companies in that sector. So something may be going on with that company that even though nat gas price goes up, if something with one of those companies is dragging it down, it won't move, or vice versa. So we're adding UNG and USO to our watch list of ETFs, and we wanted to share that with you as another way to see direct correlations with the commodity price. And again, if you want to trade these, I know those guys, I think Mike, Easy Mike was trading USO directly and making good money, probably UNG as well. Also, I wanted to point out, I heard in Kathy Wood's latest In the Know video that comes out on Jobs Fridays. I'd recommend you listen to those. It's good information. Whatever you think about Kathy Wood, ARK, it's good information is my recommendation. So I'm going to put a link to this, and I just wanted to point out that she said in there that she's seeing an increased U.S. shale oil production. Now, what does that mean? is that means more supply is again, quietly, we pointed out the rig count increases. There's supply quietly coming online in the U.S., and that will, again, more supply is going to push prices down. Where they peak, I'm not sure, but eventually oil prices are going to peak, and you're going to get more production, more supply, price is going to come down. That's just the nature of commodities. That's one of the reasons we really like trading commodities. They're very cyclical things. You know, they go up, they peak, they come down, they bottom, they go up. Great for our type of swing trading. So, again, we wanted to share that with you as well. We think that's helpful. A good way to, again, swing these commodities. And again, the near term, I think that's where the big opportunity is in at least this week, if not the coming week. So now let's talk a little more about strategy, and then we'll wrap. Okay, hopefully we've given you plenty of ideas on how you can make money this week, how you can make money in any market, etc. So again, hopefully we've given you plenty of ideas. Please let us know in the comments below what you think of all these previous ideas, and let's just talk about some additional strategies. What are some other strategies and ways you can make money this week in this market, etc. And again, just to reiterate, please look at part 1 because earnings matter. So one of the strategies, again, I'll just reiterate very quickly, is listen to earnings, look for sentiment plays, irrational reactions to earnings, look for potential opportunities, you know, to buy on an irrational decline. If you see one that's running on exuberance, look for a sentiment play. What sector is that in? What similar companies? Can you jump on quickly? So again, earnings is a strategy. Focus on earnings. We showed you in part 1 how to see who's reporting earnings, when they're reporting, how to set alerts on earnings, etc. So focus on earnings, and then also, again, let me reiterate, I think we're in a decline. We're still in a declining, I'll call it a bear market. So I wanted to reiterate our strategies from a couple weeks ago, how to make money from a bear market. I'll put this link in the description box below, and you can see in the description, I'm not going to reproduce everything that's in that description, but if you go to that video, how to make money in a bear market, you can see a whole list of ETFs on how to swing, how to long short the various indices, the treasuries, global markets, commodities, and again, the ARK, etc. So again, I'd recommend, you know, it's a volatile market, it's a declining market, so but there's plenty of opportunities to make money swinging these various sectors. You see what's moving, where's the volatility, where's the opportunity of the day, and take advantage of those opportunities. So again, we have other strategies in that video that you can also capitalize on that, but I think that's still the theme, right? So there's still plenty of opportunities to make money in any market, in this market, in any market, and that's again the message we want to convey. We hope this all helps. Please let us know in the comments below. If you like this video, like this type of information, please smash the like button. That helps the YouTube algorithm share our videos with all your fellow BeachBum traders and further traders, and helps us grow our community. Please share this with people on your social media sites, etc. Please hit the bell icon so you get notified when we release future videos, and we hope you will choose to subscribe to our BeachBum Trading YouTube channel, and also join us in the community here. Add your comments, let us know what you want to see more of, less of, how can we improve, how can we help you succeed in your trading. And again, we wish you good luck and have a great trading week. We hope that you like our weekly game plan for the trading week for this week. Thank you for watching the video to the end. If you found this helpful, we hope that you will choose to subscribe to our BeachBum Trading YouTube channel, and please click the bell icon below to automatically be notified whenever we publish a new video. Please also share this with your fellow traders and friends via the share button included below. And let us know if you found our weekly game plans helpful in the comments included below. And let us know how we can improve. What would you like to see more, less of, etc. Thank you again for watching. Good luck and have a great trading week.